Next, we're joined by Mike Utsler, Executive Chairman of Otto Energy, with the ticker code OEL. To tell us more about the company's oil and gas projects in the US Gulf Coast, I will hand you over to Mike.
Thank you, Jane. And thank you to all the participants who stayed on through this opportunity to learn about a wide-ranging group of companies. As Jane brings the presentation up, I would encourage all of you, given the time constraints, to go out to ottoenergy.com to get a better understanding and to learn more about the company, its strategy, its underlying strong financial positions, and its positioning itself for growth in the future to return value to the shareholders. You know, with each of these companies that you've had an opportunity to listen to today, it's clear to recognize that it starts with the quality of the people and the quality of the organization that underpins the company's strategy and its abilities to deliver. Our company is a small team based with significant experiences on focusing on in the North American and Gulf of Mexico onshore, offshore, conventional oil and gas arena. Our strategy as a company is built on three basic principles. The first of those is we have three existing assets which are very high quality, high performing, and excellent margins associated with those. We have the opportunity to continue to invest in those three fields, to continue to develop additional production and reserves. And using that strong balance sheet that these three opportunities, projects-wise, create, allows us to look at investing in new opportunities to build shareholder value and to return share value ultimately to those shareholders as a result. Underpinning that, as I've mentioned, is a very strong position from a cost basis, which I'll touch on briefly later on, and gives us the backdrop for why, as the oil and gas industry is emerging into an environment where oil is now over $60 a barrel and gas is at $3 an MCF, the ideal opportunity to look at a company like Otto Energy, well positioned to take advantage of its position to grow. That management team, as I mentioned, along with its technical staff, has over 200 years of experience, extensively based in North America and the Gulf of Mexico, but beyond. And that management team has led to our abilities to identify and capture the type of base assets that I'll describe briefly in a moment. Otto, as I mentioned, while focused on North America and the Gulf of Mexico, has recently sold its assets in Alaska and have retained an interest in an exploration entity that is exploring for large opportunities, oil and gas wise, in Alaska that have added to our base portfolio. The company's primary focus is in the Gulf of Mexico with three specific assets. It's a great basin in which to be in. It's a mature oil and gas basin. It has strong fiscal stability in which to operate, which benefits that. And its product is easy to get to market. The markets are extensive, and the infrastructure to move product to market is extensive, which enables us to identify, develop, and deliver low cost, from an operations perspective, hydrocarbons to the marketplace. That team that I referenced with over 200 years of experience has allowed us since 2017 to identify and capture the opportunity to participate in three key assets in the Gulf of Mexico. The first of those two, South Marsh Island 71 and Matagorda Island Lightning fields, are two of the largest discoveries onshore and offshore Gulf Coast in the last decade, which speaks to the quality of both the technical and commercial team that has been able to identify and then position ourselves to be able to participate with other companies in the development of these assets. The third asset is a deepwater tieback development, most recently brought online in October of last year, and represents equally a significant resource turned to production that underpins our balance sheet and gives us the financial strength on which to grow from. That's represented here. We are growing the company year on year in terms of its abilities to produce from these assets and the production being yielded as a result. And importantly, we're also reaching a point where the investment profile required to continue to expand production in those three existing assets is significantly reducing. The benefit of that is that the free cash that's being created on a go-forward basis is able to be used not only in these investments, but obviously funding future growth in the capture of new opportunities across the Gulf of Mexico and onshore U.S. Underlying that is the fact that we've been very disciplined in our focus on the cost of doing business in the oil and gas industry. And in a $62 oil world and $3 gas world, our current cost of operations from a field lifting cost and a non-field lifting cost or overhead is $8 a barrel. So when you look at $8 a barrel against the backdrop of $62 a barrel, it gives you an appreciation for the scale of cash flow generation that enables us to position ourselves to take advantage of that balance sheet in growing the business. But we will be very disciplined. The oil and gas industry is a challenging industry. It is a high risk, high returns business. It creates and requires capital in which to grow. But our intent is in leveraging our balance sheet going forward against the opportunities that will present themselves against these rates of returns associated with new investments. Our underlying base performance of our existing assets have an IRR of over 80. And so substantially and highly attractive investments for our abilities to return to our shareholders value in the future, and also leverage that quality of investment past into investments in the future that are being geared towards those types of financial criteria to gauge and to be disciplined in our decisioning against how we allocate future capital. So in summary, the bottom line is we are an oil and gas company. We are operating in a fiscally sound, relatively lower risk, high infrastructure yield environment in the Gulf of Mexico, onshore and offshore. We have a quality 3 asset position in the Gulf currently. It allows us to take that strong balance sheet that those 3 assets are creating and begin to take the next steps in the journey of growing value for our shareholders by looking at a very disciplined approach to investments. And in doing so, to be able to add production, reserves, and cash flow as a vehicle to both fund future growth and return to our shareholders in that outcome. That's actually the end of my story. Again, I encourage all of you to, if you're interested in Otto Energy, to go out to our ottoenergy.com website, where there is extensively significant more information about the company, about our strategy, about our growth potentials, and our underlying fiscal stability.
Great. Thank you, Mike. That was a great presentation. I would encourage shareholders and webinar attendees to go onto the website and have a look, but we do have some questions for you if you've got time.
Excellent.
So how do you see the oil price changing over the coming years, and how will this affect the company?
I think it is, in an environment where the global community is seeing a rapid improvement in prices. If you think a year ago, prices were below $30 a barrel of oil, and today we're looking at $60 plus. Some of the larger prognosticators of oil pricing for the future are suggesting $80 oil. Our view is over the next 3 to 5 years, it is a given that demand will exceed supply, and that in doing so, it will underpin the probability of prices being at least flat at their current levels, if not growing over the next 3 to 5 years. Gas on a global basis will be tied to the continuing utilization of gas as a transition product in the ongoing efforts from energy management and development of opportunities against the backdrop of realizing alternative energy sources. And in doing so, those prices will be driven by that growth in demand that yields what we think is stability in gas prices.
And so does the company have any other plans to acquire any new projects in the future?
With the strongly and rapidly improving prices for our products in the marketplace globally, the industry is coming back to life after a very difficult 2020. And you're seeing we have looked at over 40 opportunities since the beginning of the year, but driven by our very strong and disciplined approach fiscally to the terms that we're looking for. We continue to evaluate, and we'll keep shareholders advised as we identify new opportunities to invest their money and return value to them.
Wonderful. Well, Mike, thank you for joining us today. We appreciate it.
Certainly appreciate it, Jane, and thank you to all who listened.